You know, we did a lot of back testing, and I've gone back and I've looked at the numbers. And on August 10th of 2020, when we announced our $250 million Bitcoin buy, since then, Bitcoin's up 72%. The money supply is up 17%. The Nasdaq's down 2%. Gold's down 9%. The S&P is up 9%. And the only thing that looks better than the money supply expansion is single-family homes up 26%. I couldn't have bought billions of dollars of single-family homes, and so that's not even practical. So the bottom line is the Bitcoin strategy is 10x better than any other alternative. And so no, I don't regret it. We've got $2.8 billion worth of Bitcoin on our balance sheet right now, and we feel like we're positioned well for when the markets turn around. And our only other choice would be to give all the capital back to the shareholders, in which case we would have nothing, and we would be struggling to get by without any assets. We don't panic. We have a strategy. We're not traders. If your time horizon is less than 4 years, you're sort of a trader. If it's in the months, you're definitely a trader. I'm not an expert trader. I don't have a crystal ball. I don't know where the market's going to go week by week, month by month. If your time horizon is more than 4 years, you're an investor. And when your time horizon is 10 years, you're kind of a saver. So we have a very long-term 10-year time horizon. And our view is over the 10 years, Bitcoin's going to be a good idea, and it's just going to keep accreting in value. I can't tell you whether it'll go down a bit here and there. It's in the near term, Emily, it trades like a high beta risk asset, and there's no denying that. Over the long term, we believe it's a low risk store of value asset. There's about 10 things that have to happen over the next decade to make it a better asset, and we kind of know what those 10 things are. And so we're waiting and biding our time, and we think that it's going to improve as an asset class over time, and we're not in a hurry. No, I think it's been a net positive. We back tested our strategy against every other alternative. And if you roll the clock back to August 10th of 2020, when we embarked on this journey, Bitcoin's performed 10x better than anything else. Gold's down 10%, NASDAQ is flat, Bitcoin is up 86% since that time. Over any time frame, 2 years, 4 years, 8 years, Bitcoin's the best performing asset. I can't come up with a better idea. Yeah, I think if you think about Bitcoin, if your time horizon is 1 month, it looks like a volatile risk asset. But if your time horizon is 10 years, it looks like a risk-off store of value asset. So the crossover point is 4 years. Nobody's ever lost money investing in Bitcoin for 4 years. And if you want a surrogate for the book value of the Bitcoin network, it would be the 4-year simple moving average. The simple moving average of Bitcoin over 4 years is about $21,685. Bitcoin's only touched that point a couple of times in its history, and those have always been great buying opportunities. Right, this is Bitcoin's on sale.
We're touching that. We're touching that price right now. It's funny you should mention it. So, is it a great buying opportunity?
Absolutely. Bitcoin's backed by the most powerful secure computer network in the world. If I gave you $100 billion, you can't reproduce it. And it's beyond a nation state attack or corporate attack. So once you understand that, and the fact that it's a singularity, there's nothing like it in the world, then yeah, this is an ideal entry point to get into this thing. Yeah, sure. On a multi-billion-dollar balance sheet, we've only got a $200 million loan that we have to collateralize. And we're 10x over collateralized on that right now. If the market traded down by a factor of 10, we've got cash and we generate cash flow. So this has all been, the margin call thing has much ado about nothing. It's just made me Twitter famous, so I appreciate that. And the Twitter trolls love to beat up on me because it gets them engagement. As for the company's balance sheet strategy in general, we borrowed $2.2 billion at a blended interest rate of 1.8% before interest rates doubled. Junk bond indexes from 426 basis points to 820 basis points. Mortgage rates have doubled. If you had a chance to grab $2 billion at 1.5% interest, it seems like a reasonable thing to do, and I'm glad we did it. Most of it is unsecured debt. 1.7 billion of it is unsecured The 500 million comes due in 7 years after we borrowed the money. So we feel like we have a fortress balance sheet. We're comfortable, and the margin loan is well managed. Yeah, I mean, the money supply has expanded by 41% since January 1st of 2020, when we went into this kind of COVID crisis. And we know that scarce desirable assets are getting bid up in price. I mean, everybody wants to buy Rolex watches. They're buying luxury real estate. They're buying everything they get their hands on, creating shortages. So, you know, we are an institution. We have to take a 10-year view. And the only thing that's for sure is if we hold cash over a decade, we're going to have a negative real yield. The only question is how much. So we have to invest in something. And we've chosen as a business strategy to focus on what we believe is the most exciting investment idea, because it's a digital commodity that's absolutely scarce and only getting technically better every year. Yeah, I think it is on sale. The number that I look at to figure out sort of a surrogate for the book value of Bitcoin is the 4-year simple moving average, because it trades billions of dollars a day. And so after 1,400 days of billions of dollars a day, that number is 21,700. Bitcoin touched that in the March 2020 crisis. It touched it around 2017. It's touching it right now. Generally, it trades above there. You know, our strategy is we're going to acquire Bitcoin with our free cash flows from time to time. So we're kind of dollar cost averaging into Bitcoin, and we're going to hold the Bitcoin for the long term. And so it wouldn't really matter whether the price was 10% more or 20% more or 50% more. We're just going to progressively acquire more Bitcoin because that's our strategy. But
so you are going to keep buying more.
For sale, I mean, it's like not a bad price, and we will keep buying more. Yeah, so let's take the 10 sources of my pain. There's no wash trading rules, so people can they can sell their Bitcoin and buy it back and harvest the tax gain, and that's not the same with Apple. So if that gets fixed by the House Ways and Means Committee, that's a big plus for the asset. There's 520 unregistered crypto exchanges offering 20x leverage. That's a negative for the asset class. As they get regulated, and I expect they will, and as the 20x leverage disappears, that'll be a positive. There's 19,000 unregistered securities in the crypto industry, cross-collateralized against Bitcoin. As those things have to get eliminated, or they have to convert them into publicly traded instruments, that's going to decrease the volatility. There'll be a big shakeout. The wildcat banks like the Terras and Lunas and Celsius, they actually create massive volatility. And as they get regulated and they disappear and they grow up and become institutionalized banks, the asset class will mature. There's a lot of ignorance and fear. People think crypto is the same as Bitcoin. If they think that, that means they don't understand either of those two things. We don't have a stable coin, Emily. Like UST isn't a stable coin. Tether is an opaque security no one understands. If we ever have an FDIC issued stable coin or something from a public entity that's endorsed by the SEC, that's going to be very bullish for the industry. There's no spot ETF. I think it's only a matter of time before there is one approved. That'll be very bullish for the industry. The FASB accounting is detrimental. The lack of FDIC guidance makes it difficult, if not impossible, for banks to hold this stuff. We're waiting for clear SEC, CFTC guidance. And those 10 things, they're going to get cured over the next decade. They're just not going to get cured over the next 10 weeks. We're crossing the chasm. There's about $1 trillion in the asset class. 400 billion is Bitcoin. The other 400 billion is 19,000 unregistered securities. We're moving from the era of the offshore entrepreneur to the onshore public institution. And it's pretty clear from Chair Gensler's comments that he made in the last few days that they want to see all the crypto exchanges regulated. They want to clean up this industry. The stable coin is going to have to be cleaned up as well. And the winners are going to be the public investors and public banks and public companies. And the losers are going to be the wildcatters, and the entrepreneurs that got started, that are flying by the seat of their pants. And I think it's essential for us to move from a $1 trillion industry to a $10 trillion industry. So I welcome it. I think the Bitcoin's been held back by its association with the anything goes crypto industry. And as that gets regulated, then that's going to actually create a green light for public institutions and public companies to get much more heavily involved in Bitcoin, and is going to catalyze the next leg of the bull run.